You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means it is time once again for TWIFO, This Week in Futures Options, a program where the name pretty much says it all. We break down the week that was and indeed still is on the futures options side of the fence. Maybe we'll talk some equities, some ag, some crude. You never know what's going to make it onto the show. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You guys know how to get us by now, live, usually every Thursday at 1:30. We mixed it up on you a little bit last week, no live show. I apologize, we were down at the Futures Industry Association conference. Blame Sean. It was all Sean's fault for changing the times around. But we're back to our normal time. Of course, you can get us on demand, pretty much on your app of choice whenever the need strikes you. And of course, hit us up, questions, comments, insights. We do indeed love to hear from you guys. And joining me on the old program today, let's go around the horn. Let's start all the way out somewhere in the burbs. I'm not sure where he is. We are joined by Mr. Nick Howard, the founder of Bantix Technologies and creator of a little platform we like to use around here called Quick Strike. Mr. Nick, we missed you in the scenic and sunny Florida of FIA last week.
I was at my desk waiting for a phone call, and I never got one.
You were weeping and crying.
I don't know what you're talking about.
You told me for a fact you were coming downtown on Thursday, so I know that's a lie, sir.
I was still waiting. I was waiting by the phone.
He was in Small Cheval next door here, having a delicious gourmet burger while he was waiting for us to call him. Well, either way,
on Sean's account. I put my burger on Sean's account over there.
As you should. Next time you come down to the studio, we'll definitely have to get some burgers, sir. And also joining me in studio, first off, we have our old compatriot here. You're back from the sunshine. You're actually in town for a change, Sean. Usually if you're not here, you're in Asia or you're in London or some other remote locale, but you're actually in town today. Sean Smith, the managing director of derivatives licensing. Easy for me to say. Over there at FTSE Russell. Sean, welcome back to the studio, sir. It's been too long. It's been like a week since we've done this.
Mark, thanks for having me back. It's good to be back. And you chased me down. You found me in Boca last week.
I did. I did have to literally chase you at one point. It was fun.
Those burgers, Nick, have two next time. And get the fries. They're a nice little compliment to the meal, and that fiber helps. It's all about the fiber.
I just said give me Sean's order, and they looked at me cross-eyed because it was so much food. But I still took it.
Six burgers.
That's because I'm feeding Options Insider when I walk out.
That's true. You are ordering for others, not just yourself. Speaking of others, we are also joined by others in the studio. We are joined by a newcomer to the show. He is Rick Rosenthal, the Director of Business Development for FTSE Russell Indices over there at the SIBO. Rick, welcome to the studio. Welcome to the program, sir.
Thank you, Mark. It's great to be here. It's also great to be with Sean and Nick, so thanks for having me.
And Rick, as we are wont to do with all of our first-timers here on the show, why don't you go ahead and give us a little bit of an overview of your background in the options and derivatives markets and what it is you do over there at the SIBO.
So I've been around for quite a few decades. When 1982 arrived and the CME decided, let's have a stock index futures contract, they sent me over to the desk, and I ran stock index futures for Cargill from the early 80s and then Dean Witter from the 80s until mid-90s. So 15 years of my career was spent on the floor and helped launch the Russell 2000 back in the day. So been with SIBO for about 3.5 years. I head up business development for the FTSE Russell product line. We've got the Russell 2000, Russell 1000 family, growth and value, the FTSE 100 options listed over at SIBO.
And I was just making sure our listeners can hear you, Rick, so we're trying to turn you up a little bit. I think you're better now. If not, we'll make sure we give you a nice boost. Nick, could you hear him?
I didn't hear him in my headset, but I heard him through somebody else's. I could hear him pretty
you could
okay.
Hear him. Okay, you could hear
him. It was a little muted.
If not, maybe what we'll end up doing, if we can't boost him up here, maybe we'll get him sharing a mic with Mr. Sean here. But for now, let's start off. Since you guys are both here in studio, let's talk a little bit of equities. Why not? It's an interesting day. We have kind of been seeing this protracted rally for the last few sessions here. We're seeing our old friend, the VIX, pretty much not too far away from where we were talking about it last time, Sean, right around 13.5 level. RVX, though, up a bit since the last show. RVX up about a point, which is, of course, the VIX of the Russell 2000. So interesting day. We're seeing rallies on the street. Of course, most of the major indices, Russell kind of feeling the lift, maybe more than most. And also the Russell VIX popping up a little bit today. So, Sean, maybe we'll start with that. What's catching your eye out here in Russell land today, sir?
Volumes are strong. There's a lot of trading going on, and I'm excited to see Rick join us today to kind of give us a little bit of flavor of what's happening in the RUT options as well. But that spread, we say it every time, it's ebbs and flows, and we seem to be getting the Russell VIX flowing. Exactly.
It's flowing today. You know what? Let's do this. Why don't you take that? I'll mute you. Take that mic and slide it over a little bit closer to Rick.
Share it.
That way we can hear him. I want to make sure we can hear all of his pearls of wisdom. And then, just slide that one over there, Rick. We're always making changes here to the studio. There we go. All right, perfect. All right, Rick. Now I think we can hear you. Try that again. Give me a little test 1, 2, sir.
1-2.
Oh, that's so much better. Now we can hear everything you have to say. So give us a little bit of your day-to-day. What's been lighting up your tape? I'm sure you're hitting kind of the same circuit that Sean is, going out there, beating the drum, getting sick to death of talking all things FTSE Russell options. What's on your mind, and what's more importantly, what's on the mind of the clients and the people you're interacting there at these various venues when you're out there talking about Russell?
Well, let's take a look at what happened yesterday. The Fed decided they're not going to do anything with rates. And that's a big deal. They don't plan to raise rates for the remainder of this year, and that's going to help the small caps. Small caps are domestically focused, and I think that's why you're seeing leadership in the small caps right now. So if you look at the performance of the Russell 2000, last year, 2018, it made 23 new highs, and then it sold off from August to December. So it led the way on the upside and downside. And in 2019, it's leading the way on the upside again. I think a lot of that has to do with the fact that most of the revenues generated by the small cap firms are domestically generated. They don't have the headwinds of Brexit. They don't have the headwinds of necessarily the China trade deal. So for those who are looking for an alternative to the S&P 500, I would say the Russell 2000 is a good place to be, not only to trade market direction, but also volatility.
Speaking of volatility, I'm always giving Sean a hard time, and he always tells me I should ask you. So now that you're in studio, I'm going to ask you. One of the products we first got introduced to this way back in the day when Pat Fay had your old job, and he used to come on our show, our volatility show, talking about all things Russell volatility. And this was, of course, RVX, which is effectively the Russell VIX. I think to this day, if you go back and search for RVX, the shows where we talked about it are some of the few outlets that ever actually devoted any time to it. But to us, it was a very interesting one for a number of reasons. First off, as we said before, small caps. Small caps just structurally should be more volatile, right, than large caps. So if you're looking for a volatility product, it seems like kind of a no-brainer that the Russell would be the place to go for volatility. So we were very excited for the RVX. We used to watch all the OI ebb and flow with Pat all the time and get excited when there was a big print, and they would kind of go for a while and it'd be quiet. Then there'd be another big block print going up in there. Usually we tend to see the flow more active when the Russell vol would really disassociate from the S&P vol, so the VIX and RVX would get pretty far apart or maybe pretty close together. That would seem to trigger a lot of good arb between the two. And then, of course, we saw it. It's still out there disseminated, but it's not actively traded anymore. So give us a bit of an update. What your plans are for RVX. What are your thoughts on it? Maybe are there any plans to bring it back? I mean, look at a day like today. We're seeing RVX move and moving differently than the VIX. So there is a case to be made for something that's aimed from a volatility perspective strictly at the small cap. So what are the plans in that regard there, Rick?
So SIBO still calculates and disseminates the index, the SIBO Russell 2000 Volatility Index. We don't have a futures contract or an options contract at the moment. That doesn't mean it won't be reintroduced, but for the time being, these are products that had some interest. Over the past 5 years, if you look at RVX versus VIX, there's about over a 3-point premium. The average about 3.7%. RVX was a 3.7% premium over VIX. Since the small cap was outperforming the large cap, that premium collapsed. So we're looking at today, the difference between the two is about 3 percentage points. The average for the last year has been about 2.7. So there are times where it trades dramatically, particularly when you see VIX spike. And that's when the relationship between RVX and VIX can become inverted. To trade that relationship today, you would have to do this through SPX and RUD options. But I would love to see a futures and options on RVX come back. And if there's enough demand for it, I'm sure SIBO would entertain bringing it back.
Are you hearing when you're out there talking? Obviously, this show we're interested in it, but when you're out there talking to, let's say, a conference like last week, or talking to clients on the road, are you starting to hear more interest in maybe flirting with the Russell volatility space again?
There is interest in the volatility space for sure. the topics that we seem to get a lot of interest in are the overriding strategies, the put rights, the buy rights, the 30 delta buy rights. There's a lot of interest in harvesting volatility using those option overlay strategies. So as far as spreading of volatility between small caps and large caps, that's an area that I think needs to be promoted because there is an opportunity there. So Sean and I, we were at RMC Europe about a year ago talking to some hedge funds and some of the banks, getting some eyeballs on the futures spread between the two. And there was interest.
You guys have a rough gig, in the RMC Europe, and you're in London, and you're in Hong Kong. It's all the worst places of the world you guys have to go to on a regular basis. But you mentioned the kind of overriding indices. We've talked about those on the show before as well. There is a lot of interest from our audience as well in shall we say, the harvesting of the old risk premium, whether it's in the at the money covered call or the 5% out of the money covered call or the protective, or I should say the short put, or all the different things. Is it fair to say that's where the next wave of interest is coming in, Russell? Is it in more of those overwriting and general buy right and put writing type indices? Is that probably where your efforts are focused right now, Rick, rather than the RVX?
So, yes, there's a volatility risk premium that's pretty consistent over the last, let's say, 10 years. There was, or even further, there was only 1 year where the volatility risk premium, which is the implied over the realized, it was negative in 2008. Otherwise, there's a premium. And
what could have happened in 2008? I'm not sure what would have precipitated that, Rick.
Well, of course, we all know.
Quiet year, not much going on that year.
So, as pension funds and investment advisors and even retail look at volatility as an asset class, how can they use this as an alternative source of generating income? It's fairly common to put on buy rights, but we're looking at putting on these index buy rights or put rights as a way to enhance risk-adjusted returns. So they serve a very good purpose for generating returns that are comparable to the underlying while reducing risk. And if you come to our website at cbo.com, there's a couple of papers that were recently commissioned by Wilshire and Fund Evaluation Group looking at how these strategies performed over a 30-year time period for the S&P and 15-year time period for the Russell 2000.
I think we did discuss that on the show when they came out. What was it, a few months ago? So, and just to catch our audience up, these are mostly indices that are being disseminated for to be used as benchmarks by other firms. There's no plans. That'd be interesting, though, kind of meta to list an option on the buy right index. What do you think? Is that in the cards down the road? Listing calls and puts on the buy right and the put indices and all that would certainly, I think, intrigue our audience at least.
Well, I'm not going to promote any products.
It's just the three of us talking in a room. That's it, Rick. Nobody else. Forget about Nick.
But I will point out there's a couple of tickers out there if anyone wants to buy a wrapper, an ETF wrapper that is actually benchmarked to a buy right or put right. They exist.
That's true. On the ETF side, there is some of these licensed products. They are out there. And so, and I know they've been popular. You have the different flavors of, I think it's like at the money covered call, 5% out of the money. Any plans to add anything new to those formulas? Anything else you're hearing when you're out there kind of doing the road show? Hey, we really want, I don't know, short put spread, something like that. Anything else you're hearing from demand from the clients in terms of adding to the universe of the premium harvesting indices?
Amongst the investment advisors, they're very interested in these buffer and enhanced strategies. So CBO's created some target outcome indexes, and there's a couple of mutual funds and ETFs that are using these target outcome indexes, putting them into a 40 Act fund, and it's kind of like a structured product. So it gives upside participation and downside protection.
Let's see what's going on, picking up upside and downside. Let's see what's lighting it up out there this week in terms of the Russell options over there. Again, listeners, you guys can play along the home game, cmegroup.com/TWIFO, TWIFO. That's where you can see all these cool reports and a lot more. And let's see what's lighting up out here this week. Actually, again, we mentioned it's been a strong week for the indices. Net on the week, we're seeing the Russell up to about 1568 or so, up about, looks like about net 0.5%. on the week here, up looks like about 5 handles or so. And looking here at what we're seeing lighting it up, actually another decent week. OI up about 11%, Sean. So your roadshow has been bearing fruit here. And it looks like the big trade this week actually is a bit of a downside put roll, which seems to be in line with some of the other paper we're seeing out there. I think there was a big roll in the SPX recently as well. So that kind of makes sense, given the fact that we're getting a little top heavy in these indices. People are concerned about a little bit of downside, but maybe they want to keep that downside love going. In particular, what we saw out here in the Russell options looks like it was a roll from the April 1330 puts. Again, these are pretty far out of the money already. That one looks like closing, and then the exact same numbers. That's how you usually, it's a good sign that it's a roll going up in May opening. All of that going up yesterday, and those were the 13 half puts. So closing out farther out of the money puts, maybe reflecting the fact that we've rallied a bit since that trade was put on, and readjusting at a higher, more relevant strike. Is that kind of the paper you were kind of expecting this week, Sean, as we're at these kind of top-heavy levels here in the indices? And is this kind of, are you excited about this paper we're seeing going up here in the rut options that your roadshow is starting to pay some dividends, sir?
It's very good to see folks rolling their positions, and makes sense, right, with the index rallying, that you adjust those strikes to get that same delta or maybe a volatility across the board. But it's very exciting to see.
Hey, they're not closing and going away, right? They're closing and reopening. So clearly they're liking something out there.
Exactly. Very exciting to see.
Which is, you don't want to get one side of the roll. You want to get both, and that seems like what you guys are getting over there. Mr. Nick, anything? I know while you were sitting there last week crying over your burger, waiting for us to dial you, anything catching your eye in the world of equities and volatility and slipping and sliding this week, sir?
Well, I had a big, long thing prepared for last week, but I think I left. I used it as a napkin, I believe.
You used it to dry your tears. I know.
I did. Well, actually, to wipe the juices from the hamburger off the sides of my mouth. So I'll do my best to try to recreate that paperwork. No, I just wanted to mention, I tweeted something out, as we're talking about the Russell being a nice opportunity now that it looks like the rates are on hold, and we should probably grind a little bit higher in the interest rate futures, which means that people will start to take some of the return and maybe move it around a little bit. Just to reiterate the announcement that the CME is going to release those micro futures on the S&P, the NASDAQ, and on the Russell. So that should give that product even more exposure to in particular the retail level, and I guess they're actually touting it as well as a way to for people to refine further what their hedge is going to be, because they're able to break it down instead of having to go into big contracts or minis. They can go even further down in terms of how much exposure they want to cover. So that will be something to watch. Now, obviously, there won't be any options on those micros, but we'll have to watch the volume and see if that takes away from the regular minis, and then what that does to the option volume, because leading into that, as we spoke about 2 weeks ago when I actually got to be on the show, as opposed to last week when I was sitting around, we didn't get a chance to talk about what happened with open interest. But this week we had another nice increase in the Russell, another 10% increase. So we're up to almost 31,000 open interest. Again, like we talk about all the time, it's not sexy like the other stuff with the big numbers, but when you're talking about percentages, you're really just talking about, like to see those double-digit increases week after week, and that's what we're seeing. So that's a big positive. As far as anything out there on the skew side, vol. If you're looking at the TWIFO report, let me bring up some more interim ones here. Looking at the TWIFO report, skew, we have a little bit of a change in the quick skew, but I think a lot of that's coming from the fact that the market is up. We see the puts are a little less bid and the calls are a little less offered in comparison to each other. But I think that's mostly with the changing of where we are on the vol curve. But we have increases across the board here. Let's see, what's my 30-day option? The R3E, we have up about 1.5%, 1.6%. So that's really a vol increase because we see the curve shifting with a little bit of a slide down as we move up in the future. So again, I don't know how much, we saw a move up and then we saw a move down. We're kind of grinding a little bit higher here all the time. So I think what we're going to see is, we saw like we said, we're seeing a bit here in the volatility, but we're seeing a slide too as we move up in the futures. But a good sign to me is that we actually see an increase in vol, even though the futures are moving up. We don't want to just see that slide down. So people are buying options, at least in the Russell. I haven't looked at the NASDAQ or the E-mini yet, but in the Russell, it looks like there was some demand.
Dare I say, maybe a good time to be playing around in the quick strike shifting and sliding tool, because you're right, we're rallying in the indices, and usually that's a sign for vol to come off, right? And yet we're seeing exactly the opposite out here in the Russell 2000 land, which is kind of interesting. Again, maybe another sign that there's things to pay attention to. Listeners, if you haven't checked out already, quick strike, the shifting and sliding is available on all the versions now, right, Nick?
Well, yeah, the free version has it out there. The professional obviously has it in there, and then the standalone version, which I'll talk about at the end, it's in there, and it's all the links are hot in the standalone one now. So yeah, it's meant to show you what's going on. So right, and I think that's a good point to reiterate, Mark, is that vol is up. Even though markets rallied, vol is up. So that's there's buyers. There are buyers out in the indexes.
It's not just a done deal that when we rally. In fact, we've had questions about that just not too long ago. Can vol go up? I think it was maybe even last show. That can vol go up in the index rally? Here's a perfect example. The small caps doing just that this week, as we're seeing some interesting stuff. As you mentioned, post rate, shall we say, pumping the brakes there a little bit on future rate hikes, giving a little bit of a lift to all things Russell. Speaking of all things Russell, I wish we could spend the whole episode on all things equities. We got to move on. We got time to do maybe one more segment, but before we move on from this one really quickly, Rick, give us a little bit of a peek, a little bit of a hint, a little bit of a tease. What can our audience expect from you guys over there on the FTSE Russell team over there at SIBO in the coming weeks and months? Maybe are you going to jump on the bandwagon of maybe some smaller size contracts? Is it more of the premium harvesting indices? Is it maybe, dare I say, something in the RVX land? What can you give us a tease for, Rick?
So recently, going back to October of 2018, SIBO listed RUT over at one of our sister exchanges, BZX. And it has a different trade match algorithm, which is price time. So what was listed was strictly the AM settled standard options. Hopefully sometime soon we'll see the weeklies added to that. So that's the only peak I can offer within the FTSE Russell world. Other than that, perhaps we'll have more benchmark indexes coming down the pike, but nothing I can disclose at this moment.
Again, Rick, it's just us here talking here. Go ahead.
I just wanted to add to everybody listening, RVX, Rick Rosenthal's the man, so please reach out to him. Again, they react very strongly to client demand. So
there you go. Stop bugging Sean. Stop bugging me. Bug this guy here. Bug Sean about RVX. Well, you guys get to sit tight for a minute. We've got, I think, a few listener questions up your alley. I want to make sure we get a couple other, at least one more. And Mr. Nick, I'll let you choose. Where else should we go here for our next product here on TWIFO? What do you want to hit?
Well, I'm always going to want to talk about gold, especially when it's played right into our hands in terms of what we usually like to see when we meet, when we go down to the bottom of the range. What happened, right? What happened?
Yes, exactly. You're always reliable to talk metals or perhaps a little bit of crude. So I figured you'd go with one of those two.
I thought it was called crude.
I actually guessed wrong. I pulled up crude first. So I'm gonna switch right now.
That's easy to change.
I'm gonna switch right now. It is easy to change in the old quick strike.
Go to crude. But I like talking metals only because we'll talk about that when we talk about it.
We'll talk. I got metals up right now. Let's do it. I'll let you lead the way because you're so excited.
Oh no! It was a couple weeks ago now that we had the conversation, right? We had come off the highs on the metal or the recent highs, and we were back down to sort of the bottom end of the range we had been trading in. And again, we brought up how volatility was kind of in the belly of that vol curve and in lows for an extended period of time. And that 1270 strike looked like it was a 25 delta at the time. I think we were talking about it. And we talked about our 25 delta hedge strategy, and that would have been a good thing to do once again, because we got a fairly good move up. We went through our break evens on that same trade. I think I think I put some 16 delta ones on in the spread builder, and would have worked out. So I think, this gold, again, the volatility, the absolute levels are low. But as we've always mentioned, that low vol gets us a high gamma and gets us some good strikes within a fairly reasonable price movement range. And in this case, we were, that was a 1270 strike. I think we were around 1295 when that happened. We moved up to all the way into almost, I think we hit the 1320s at some point today, right? I think, let me check April, how high we got. I thought I saw it hit up above there. Yeah, we got to 1320 around this morning, early this morning, in the April contract, and we came back off here. So just even in intraday, we had a $12 move. So I still like that. I like this product for people who want to kind of get into the futures options. It's got a nice range. Its premiums are low enough. It's not gonna, nothing against the Russell or the NASDAQ or the E-mini, but gold's not going to rip your face off if there's a problem, right? It's not necessarily going to have that same sort of catastrophic move up or down like you might see in the indexes if our commander-in-chief says something stupid or if something else happens with the China trade deals or the Fed goes the other way on some of the conversation. It's just a good, nice underlying futures range, low volatility, some opportunities to buy, learn about options instead of just selling like everybody wants to do and sitting on stuff and risking that side of it as well. But
you love your options and futures in the gold, and it has worked out. It's moving enough, right? It pays the rent, as you like to say.
Oh, it definitely has. No, those little mini straddles, like we've been calling them, those 15, 20, 25 delta hedged positions turn into mini straddles that have really good break evens. The belly's not too much below the x-axis, so you can get a little bit of movement and get out of some of those futures and get your premium back and then have some stuff on for free. That's really what it's all about. So, if you really want to learn what you're doing and if you want to make some money at the same time. So, other than that, like I said, a good price range. Vol is really sort of decrepit here over the course of the week. Not much happening. It's flat to what it was. And even saying that, it's flat with movement. Now, we're not much different than we were on Friday, but we did have some good ranges, and especially from 2 weeks ago when we initially were talking about again being at the bottom end of its range, and then the skew, not much change there either. So a good increase in OI, 5%, distributed pretty well across the term structure. So I like talking about it because there's stuff to talk about. It's not, it's got $1.5 million almost in open interest, so there's stuff going on there. So, and the other thing I mentioned along the lines of the metals. We're going to be doing something new called quick alerts, where we're scanning our database for different volatility parameters. And right now, silver is signaling those alerts. So we're on some real close to 1 and 2 year lows on the silver volatility. So we'll have to pick that up at some point in the next couple of weeks and have a conversation about that as well.
Yeah, we'll get Mike back on and talk about his silver collar that I'm sure he hasn't done anything with since the last time we talked about his 2-year silver collar that was kind of just sitting. Maybe he is doing some stuff now. We'll see. Speaking of what's going on out here, looking really quickly in the metals here, the gold, 1,300's lighting it up. Not exactly a surprise. Those are in April. 6,700 or so going on throughout the week, back and forth all week on that strike. Again, we kind of blew through that strike. Not a surprise there. What's catching my eye, I'm surprised our listeners who are always looking for the gold whale, Nick. I'm surprised they didn't write to us about this one. But it looks like there was some interesting action out a little bit further out. What is this? June of next year, June of 2020. And it's we saw 4,200 of the 1,600s going up on Tuesday, along with 1,500 of the 1,400s. Maybe a little funky thing there. But then looks like a nice even 1x2, a 1,600, 1,800, 1x2 going up on Wednesday, 2,100 by 4,200 times. So I know all of our listeners are out there looking for this guy doing the ratios out there in gold. Looks like he may be back and a little bit further, actually not too far out. He's only out to 2020 of June. Usually he goes beyond that. So he's only out a little more than a year and like 3 months or so, which is kind of interesting. So some interesting paper out there in gold. Again, you guys can find it all for yourselves. CMEgroup.com WwW.com/Twifo. And I'd be remiss if we didn't, before we got some of your questions really quickly, because I got a heart out today, listeners. But before we get to some of your questions, I'd be remiss if we didn't at least touch on crude. Of course, WTI hitting a 4-month high recently, right around that 60 level for the first time, again, since about November. Part of that driven by crude inventories dropping over here in the States, also seeing supply cuts from OPEC continuing to have their effect, along with sanctions against Iran and Venezuela. All of that being mixed into the heady stew that is driving WTI north. As we're talking right now, it's a little bit shy, just a tick, 56.90, so just a tick under the 60 handle right now, net up about a handle or so on the week out here. Seeing vol also up, which is kind of interesting. So maybe, Nick, we're rallying into that range where getting north of that 60 handle, maybe people were a little short of there. Maybe they're getting a little nervous trying to buy back some vol. Because another product where we're up and the vol is up pretty much here as well. In terms of what was lighting it up out here, no surprise that it looks like it was out here in the 60 strike again out here in May with 11,000 and change, 11,500. No surprise, you break through 60, it's the 60s that are lighting it up throughout the week. 4,000 on Tuesday, 3,000 on Wednesday, about 1,700 today, about 3,000 on Monday as well. A good chunk of that opening, but a lot of back and forth. Again, as we blow through that strike, that's not exactly surprising. Looking out here really quickly to see if I see any aberrant longer-term paper out here. See some 75s lighting it up 6,200 times. As well. Those are out later in the year in September. Also, we have the 40 puts in DISA 2020 lighting it up 1,700 times. That's about as weird as it gets. Mr. Nick, anything catching your eye out here in the Texas T this week, sir?
No, I think, I know that I was thinking that we weren't going to go too much higher, and I think we talked about 60 being our high end of what we thought, but I'm still surprised that we got to these levels as quickly as we did. But then again, I'm just an observer. I watch those domestic numbers and the other stuff, but sometimes I think that there's a lot of reactionary movement to that as opposed to just the general direction that the commodity is going to go. But you mentioned vol is up, and again, it's purely up. It's not just we have a shift of like 1.5% in the May contract, which started the week as a 30-day contract. So it's a good gauge for us to pay attention to that one. A little bit of slide down as we moved up from up to a higher strike from a lower strike, and that's the shape of the curve there. So a pure vol movement here as well. And with that, we're going to see a natural sort of increase in the quick skew. So we did get a shift, a little bit of a shift in that curve because of the push up, but then also a little bit of a tilt in that vol curve as well. So a little bit better bid puts, a little bit worse or a little bit more offered calls in the front contract. But after that, not too much change. So the term structure itself, I think this had sort of, it has sort of a classic front month increase in volatility type of thing. You had a movement, maybe something that wasn't necessarily as expected as much, and that's where you got your increase in your vol. As you go out, the June's up a little bit, not quite as much as the May. The July is basically a wash between the shift and the slide, and then everything else is either a little bit bid or just or offered even. So it's it's that I'm going to buy the front month because I want to capture this movement. But I think the other general consensus across the board on vol is that there's not much happening, and we're still sort of low here, even though we caught a little bit of a bid. When you look at the history, we're trending down in volatility. So again, we talk about these movements within a price range. That's really what we're seeing, a movement back up towards the high end of what has been a channel for us. So you're going to see some bump. We saw that to catch that. People buying gamma, bid up the volatility in the front month, but general consensus, I think, with the vol is that it's pretty steady here still.
Speaking of steady, we got a steady flow of your questions here on the show. So without further ado, let's dive right into a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options. Facebook.com/TheOptionsInsider, StockTwits.com/OptionsInsider, or via questions@TheOptionsInsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your segment, the Futures Options Feedback, where you ask the questions. We'll see how many we can burn through. Sean, this one looks familiar. Did we ask about the weird product last time? Did we talk about that one on the show last week? Looks kind of familiar. We did. All right. So
then you challenged me to come up with the...
Yes, that's right. That was your homework for last time. So what's your weird product of the week, sir? You didn't do your homework. Did the dog eat your homework again, sir?
Yeah, it's products are so efficient at these exchanges. To pull out a weird product from an exchange traded product, it's just
it's
weird,
fun.
Tough.
It's fun. I think you got to go really esoteric. You got to get into like some of the crazy dairy or some of the other esoteric stuff that's really really deep in the weeds out there. Okay, we'll give you a punt till next week, Sean. We'll let you go on that. How about these?
Sorry, Embarcadero.
Yeah,
we'll do some work.
He's
there.
asked 2 weeks in a row now. He's not getting any love here. Let's move on to someone that are up your alley a little bit here. Frank, or maybe Fran C. It could be Frank with a C. You never. I won't judge. Frank, let's go Frank with a C because this sounds fun.
It could be Frey from North Carolina or.
Okay. Yes.
Nick, you're good with these.
Nick,
what do you think?
I didn't get show notes today, so I can't even see anything.
No, look at Nick not getting any love. Here we go.
I'm telling you.
How about this? Wait 2 seconds, and then there you go. Now you can play along.
I've been down by the doorman over on Canal Street, too, for the last 40 minutes, and nobody said anything.
No one's letting you up. You won't get the hint. All right, let's see here. This question from Fran C., a.k.a. Frank from North Carolina, a.k.a. whatever Sean just said. There are so many Russell options products. Can you break down the main differences between the offerings on the different exchanges? I'm kind of with them. You guys have a busy job keeping it all straight. Rick, this is your bailiwick. Why don't you or maybe you and Sean, whoever wants to take it.
We can tag team.
You can tag team this one.
Yeah.
There's a lot of different listed Russell stuff out there. Maybe give us like the highlights.
Sure. From SIBO, we have the Russell 2000, the Russell 1000, the Russell 1000 Growth, Value, and the FTSE 100 listed options.
And CME Group has the whole Russell suite of futures contracts as well, and along with options on the Russell 2000.
And really quickly, just any for the main listed RUT stuff, there any differences you can think of that are material to the audience, contract spec size, anything along that would be, as they're evaluating which ones to use.
You want to talk multipliers?
Well, sure. I mean, the
notional value.
One is security. The other one's an option on futures. So on the security side, we're looking at different tax treatment for the 1256 contracts. These are broad-based indexes. They have a 60-40 blend, long-term, short-term capital gains tax. So that's an advantage. We have these are cash-settled indexes. They're European style, so there's no early exercise problem. The notional value is $100 times the index. So those are the main distinctions.
And on the CME side, the multiplier is 50. But now you got micros coming, so you got a 1/10 the size.
So it's going to be all you pretty soon. If you have I would like to have
You're
seven.
Slice
I would
and
like
dice
to have
this
7
stuff up.
shares of Russell. You can have a contract that's going to give it to you pretty soon. I'd like 3.5. You're going to have a contract that gives that to you pretty soon. So there you go, Fran C. or whatever, I forgot, you Frank from North Carolina, whatever you called it. Yeah, that sounds like you got a lot of choices there. In addition to all the other, ETFs and ETPs that are out there listing things like we mentioned before on the premium harvesting, and there's a legion of. We don't even get into those. That's a whole other show. But there's a lot of different choices out there. All right, let's see. We got time for one more before my producer's going to kick me out of the studio here. Let's see. Let's go. Let's finish off another. Let's keep the theme going. One more. We got one more here for Russell. Level F. Level F wants to know. I love these questions. We get these a lot. I guess people have a hard time pulling up the chains for themselves. But let's do the work for them. How not? They says, how far out can I trade the RUT options? He's looking to do something in the 2 to 3 year period. So Level F wants to go out 2 to 3 years. What do you guys have for him?
So we have leaps. We also have flex options. So I think you can go out 5 years.
Yeah, especially with the flex, you can go out, for crazy
time.
You
can custom.
If you want 27 years, someone will quote it for you. Anything to add there, Mr. Sean?
No, but absolutely reach out to Rick Rosenthal if you have any questions about RUT options at CBOE. He's happy to answer your questions.
All right, that music means, unfortunately, we've come to the end of a fun sojourn. I wish we had more time, but I do have to get rolling. But before we go, let me go back around the horn. Rick, you were kind enough to join us in the studio today. You kind of gave us a little bit of a hint, a little bit of a tease. But let's remind our audience, if listeners are intrigued by all things footsie over there at Footsie Russell, I should say, over there at SIBO. They want to learn more. Maybe they want to bug you instead of me about the RBX contracts. Where should they send all their inquiries, sir?
Rosenthal at SIBO.com, Rosenthal at CBOE.com.
There you go, listeners. Now you know all your questions about RBX. That's the place to go. And Sean, of course. First off, are you going to be around next week, or are you traveling hither and yon? And then B, what else is coming down the pike from the world of all things Footsie Russell, sir?
Traveling next week. Unfortunately, you can chase me out to California if you like. I'm at CBOE's Risk Management Conference.
Yes, Risk Management. This is one of the first years I'm missing it in a while, just because I like it better when it's in Florida, close to Boca. Then it makes things a lot easier.
Easier, right?
When it's got to go all the way out to California. It's a whole other thing that becomes challenging.
But as I mentioned last week and the week before, we're into the June contract, which we're gearing up for an exciting recon. We've got some volume numbers we'd like to break through and have an exciting recon of the Russell suite of products. So.
And Mr. Nick, speaking of things that are exciting, sir, we talk slipping, we talk slide, and we talk skew. You guys got a lot of cool stuff cooking. What's coming down the pike from you guys over there at Quick Strike? So I've seen a lot of videos coming out for you guys lately, too. Is that the new thing?
No, you got to give me just a little bit less volume on. There you go. No, we just try to get some traction for people who are interested in looking at the new premium stuff that we offered on those single tool quick apps. So Spread Builder, TWIFO, and then we have that quick options education for people who are new to options. There's some opportunity out there to learn from that tool as well. So you can go to bantix.com/pricing and see the videos, as well as see the affordable annual price that you have in these one lot apps. TWIFO is a fully functional TWIFO, available $300 for the year. So take a look. And anybody who tweets back and says something about listening to this show, I'll take care of you. That will tell me whether anybody's listening at all. So
there you go.
Let's see what happens.
Nick will take care of you, like the Godfather.
Is that a burger?
Like the Godfather. He will take care of you. Hit him up over there. Just go to bantix.com, bantix.com, or Quickstrike, quickstrike.net, QUIKSTRIKE.net. Those are the two places to check out the cool new tools. And give him a follow on Twitter while you're at it, at Quickstrike, QUIKSTRIKE1. For all that good data. He's putting out links to the videos and all the other fun stuff. Give him a follow over there. Let him know, hey, I heard you on TWIFO. So that way he won't be as sad that we left him out of all the shows for the last couple of weeks. And, of course, friends over there at CME, you can follow along with the shows, learn all that good stuff. CMEgroup.com/TWIFO is the place to go for all of that. On behalf of Mr. Nick and Sean and Rick and, indeed, myself, I want to thank all of you out there for downloading, streaming, subscribing, sending in such great questions, all the fun stuff that you do. Keep it coming. And we'll see you next time for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.